Hi, everybody. This is Hyperwave. I'm Leah Wald here with Tyler. It is Feel Good Friday, and the trend is some people's friends, though we may be the bearer of bad news today, but it will be very interesting show, that is for sure. And Tyler, you have a fabulous shirt too.
I do. There it is, folks.
Wait, don't
Hyperwave.
move. Stay right there. That's us. Okay.
Yeah, this is unfortunately a very important vlog today. We wanted to be sure at the close to fill people in on what you already know, but I'd like to bring a little perspective on what it means in terms of Consensio, in terms of Hyperwave. I'm wearing the Hyperwave shirt as a shill for the unconfiscatable conference. Tone has done an unbelievable job pulling this thing together, and we want to thank him again. We filled up our Hyperwave um, workshop several weeks ago, and Tone offered to find a bigger space for us so we could include another 20 people, and half of those have signed up. So we're down to only about 10 now. If anyone is considering um, making it to Vegas, uh, and you're interested in learning Hyperwave in great detail, this will be the first time that we publicly teach people all the details of Hyperwave. And Leah is now pulling up our website at lucidinvestmentstrategies.com and showing you exactly where to go, what the schedule is going to be. I'm doing everything I can to keep it down to about 7 hours, but we will cover a lot of material, a lot of examples right up through today, what's going on, how we've been able to navigate these markets using just a couple of tools that you can easily learn and use them for the rest of your lives. They're very important. And I'm not saying that because I've used them for 40 years. I'm saying them because I'm comparing the results of the Consensio and the Hyperwave tools to all the other tools that I've been um, actively studying for years and years and years, and just find these at this moment in history to be the tools that people need to be able to think through all the noise. And there's just too much noise, and you need to simplify, simplify, simplify. And I think anyone that attends this particular workshop will come away with some very, very valuable tools that you'll be able to use in all sorts of ways in many, many years to come. So that's enough of that. Let's get to the important points today about what is happening. Bitcoin is uninteresting to me, as you know, and that's only because of what Hyperwave tells me about it. It's not really doing anything. It's sunk back to 3,800. I hope Tone is right and we get one more run back above 4,000, maybe 4,500, maybe as high as 5,000, so that any of you that have not yet exited can consider that on a move up. It's possible we're not going to see it move any higher than it already has, and we've already begun sinking back down. We'll take a look at it at the end of the show, but the big news today has to do with world markets, US markets, and their implications for economies around the world, but more importantly, the bigger question of, is this going to be the trigger of the big problem of debt and credit. And the only way you can draw big conclusions is by looking at all of the parts that go into those conclusions. And that's what we're going to do today. We've titled this Something Wicked This Way Came. I've been saying for a year, something wicked this way comes, but it has arrived and it is on our doorstep. We have gone completely out of the US markets, and we have never been in the world markets over this past year, which does not leave a lot of places to put investments. And we will see why in just a moment as we go through all of these charts. So I'm going to start by screen sharing, and we are going to look at US markets, world markets, and we are also going to look at sectors. This was the worst week in the market in many, many years. So far, it's the worst month since December of 2008. And that is meaningful for a lot of reasons. So let's pull this up. And we will start with the big US indexes. This is a weekly chart of the Dow Jones Industrials. This is the key point right here 5 weeks ago when all of the moving averages rolled over and the price stayed below them, tried to get above them, fell back below them, and now they are all accelerating down to new lows. I'm going to full screen this so you can get a look at the Copic curve, which broke below the zero line here on a weekly basis. And you can see the size of this. This is a weekly close down at the 22,400 level. All of these charts are going to look the same. The S&P 500 closing at the lows. All moving averages, including the long-term, moving down. The stop and reverse points accelerating down. We are in a full bear market mode. We have no exposure any longer to the long side, and now we will begin building in coming weeks and months short positions, net short positions, which I've never done in my career, but I think this particular downturn is that important. Here is the NASDAQ 100. And just keep your eye on the Copic curve. The zero line is right here on all these charts. Here's the NASDAQ composite. Here is the very important Dow Jones transports, which were down another 1.75%, confirming the Dow theory. I'm going to expand this one out so we can look back into time to see that we have now taken out the lows from this run up, and we are now lower than we have been since May of 2017 in terms of the Dow transports. The Russell 2000 was down another 1.75% today, has taken out all of the lows going back, including these in August of 2017 and in March of 2017 and in January of 2017. We are now accelerating on the Copic to a negative 30%. Very, very negative action on all the major US indexes. Let's take a look at some world markets, starting with the UK. The Japanese stock market has now closed lower than the March lows, and we are now coming down to a little bit of support, which the way all of this is acting is not going to last very long. In Germany, the German index, the DAX, DAX, right down to the same levels. This is 2016 support levels. We've got a massive head and shoulders that is broken to the downside. Australia, the largest candle on the entire chart to the downside. And we're going back to 2016 in Australia. Brazil holding on fairly well relative to other, and we still have positive stop and reverse points, but one more week, such as the one we've just had, and we will be back down at the long-term moving average, which is still moving down, even though we've had this brief period where we were able to break back above it. We are not near the zero line, but we are turning down from 40, which is enough to signal a sell signal on a weekly Copic. The iShares China Large Cap ETF has dropped significantly, but is still hanging on to the spring of 2017. But notice the long-term moving average moving down very sharply, coming very close to taking out the stop and reverse points. We are still under the zero line, and now this is beginning to roll over. Invesco China Small Cap ETF, same story, but still some strength below the zero line that will probably not last very much longer. The Msci German index, even worse than the DAX. The Hong Kong, still above stop and reverse points, below the zero line, but not rolling over at this point. Maybe something is going on in Hong Kong at this point, but the long-term moving average is moving down. As you've heard me say, if you've heard me go through these before, that as long as the long-term moving average is moving down, you've got to assume that price and intermediate and short-term are going to find tremendous resistance at that long-term moving average. iShares India holding up the way Hong Kong is, but the long-term moving average moving down. fairly far away from these last 4 weeks in terms of the stop and reverse points. So that relatively is looking good. I wouldn't touch it with a stick. I would rather be in cash. The India fund looks a lot worse, with the long-term moving average dropping down very, very quickly. And finally, we'll take a look at Japan, which has suffered a tremendous drop this week and is now back down to 2016 levels. Let's take a look quickly of sectors in the US. Consumer goods, which had been holding up relatively well, is falling apart. Consumer services, which was holding up extremely well, has taken out the stop and reverse points. The long-term moving average has finally turned down after being up since March of 2016. Energy continues to fall apart. WTI was down again today, and we are now all the way back to the lows from late 2015. The US financial service, which had been holding up very well until recently, and now Goldman Sachs, all the major banks, and now more and more of the regional banks are in free fall. The long-term moving average moving down, and we're at a negative 20 now on the Copic. Lows, below lows, below lows. Healthcare had been one of the bright spots along with utilities. It is no longer. This has been a decisive drop this week below the stop and reverse points. We turned down from 20, which was not very high, but we have now crossed the zero line to the downside. US industrials, same thing. Long term has turned down, and we are now at negative 20 on the Copic curve. The bright spot had been utilities, still is on a relative basis, but it had a terrible week, and it just this week broke this string of stop and reverse points that were bullish. We have not yet taken out the long-term moving average, which is moving up. So for those that are hiding in utilities, be very careful, because just a little bit lower and we will take out the long-term moving average. It'll take some time to turn that down. We resisted the zero line, which is right here, but we have turned down again on the Copic. So I would not be in it. That's why we are completely in cash. There's simply no place to hide. Telecommunications is horrible. Here's US oil. This is West Texas. After 4 weeks of trying to bottom, we had this tremendous weekly drop, and we are now at negative 45 on the Copic after breaking the zero line just recently on this candle. Home builders, new lows. It looked for a while, almost a month and a half, that home builders were finally trying to regain the strength that they had shown. But now long-term moving average dropping sharply and accelerating this week. This week we have taken out the stop and reverses that were created during this month and a half long counter trend, and we are now at lows that we saw back in October of 2016. And finally, this is the technology sector, and it is in free fall, as we have known for some time, but the moving average has only been moving down for the last 2 weeks. It seems like it should be much lower than that. Just draw a trend line below all of this activity, and you can see why so many of the individual components have been dropping so sharply, and today was particularly bad. So let's just take a quick look at individual stocks. Tesla holding up, but has dropped this week from the previous week, where we had gotten up as high as 300, almost 80, and we are now at 320. And still looks relatively strong compared to everything else, but it too succumbed during the week. Amazon is in free fall and was down 83 points today. Google down 30 points, back below 1,979, down 3% today. Facebook down 6% today. Apple down 4% and in free fall back to 2017, and the long-term moving average moving down. Microsoft down 3%, Cisco 1.5%, Comcast 2.5%, FedEx. I sent out a tweet this morning about this. I consider this as one of the bellwethers of the US economy. Was doing fine. It is no longer doing fine. It's in a free fall. Intel down 1.5%, relatively strong, head and shoulders sitting on the neckline, and one more drop down and we take out the stop and reverse points. Netflix down 5.5%. Head and shoulders broken, long term moving down sharply, -40, lower than back in 2016. Square down 6% today. Micron Technology, and even little old AT&T. So nowhere to hide in the world. US market is firmly in a bear market. We've got a midnight potential of a shutdown of the government. It's possible that something is going to come out before midnight, but I wouldn't have been playing that because it looks like both sides have decided that this is where they're drawing the line in the sand over the wall between borders of US and Mexico. The House of Representatives did approve 2 bills that are being considered. One of them gives Trump $1.7 billion of the 5 that he's asking. The other gives him the 5. It will take 60 votes in the Senate to approve the $5 billion. And Trump has said that he will not sign the $1.7 billion bill if it does go through the Senate. So there's only a number of hours before that happens. Let's assume for a second that something is worked out, both sides give in, and we have a $3.5 billion bill. I just can't guess if it will be signed or if it won't. And therefore, even a compromise might not be able to solve that problem. The problem with shutting down a number of agencies, 6 of them, I believe, is not going to have an actual dramatic impact except those people working there, but it implies much bigger things in terms of Congress being able to work with the president when the new Democratic House comes in January. Okay, enough of the good news. The place to be is in cash. Our clients, our consulting clients, fiduciary clients have been raising cash throughout all of this. We are fully in cash. And our next moves, the orders that I've been writing, are to begin looking at net short positions. So I wanted to just take a quick review of a very simple way of looking at all of this. And we're going to start with the Dow. This is the inverse Dow, and I'm going to take it all the way back to the beginning of the bull market. And then we are going to take a look at a full screen to see exactly what happens with these inverse funds during a bull market, dropping from $370 down to $60 during this bull market move. But these can be a very valuable tool when this begins to happen. Because what you're looking at now is the beginning of a bull market with prices above these prices back in March of this year. The stop and reverse positive. This is the zero line on Copic, and we are now approaching these highs already in terms of Copic signal, but we're only at a +10. This can go much, much higher, which implies that this can go much, much higher. As you can see with this is a single, this is not leveraged. This is just a single ETF that is inverse the Dow Jones Industrial Average, which gives people the ability, if you are for tax reasons having to hold on to large gains from the bull market, to hedge your positions that you don't want to sell for tax purposes by putting these kind of positions on against the long positions you have. If you have gotten completely out of the equity market, you don't have to say, well, for the next year or year and a half or 2 years, I have to sit idly by. You have to be careful with these. And I'm not making recommendations to anyone because I'm talking to a large crowd of people that we don't know. So this is not advice. I am showing you tools that are available under all conditions, regardless of what the market is doing. So it's not all or nothing. It's not all having to hold through bear markets. There are things that you can do and things that are wise to do, regardless of what consensus tells you you should be doing. You just have to expand your vision a bit and understand how these things work. Okay, I'll quickly go through the others just to show you that This is not an anomaly. This is the inverse NASDAQ. This is the inverse S&P. This is the inverse mid cap. This is the inverse Dow that we just showed you. This is the inverse Russell 2000 small cap. And this is another small cap, which is the S&P 600. All of them look identical. All of them have broken below the zero on Kopic. All of them are in a full bull market, long-term moving up, stop and reverses below the price, intermediate moving up, and short-term moving up. So there are things that can be done. You just have to take the time to understand how all of this works. And once again, we will go into what I believe to be the most powerful long-term tool available, which is Hyperwave. And we hope to very quickly fill up those last 10 seats. For anyone that is interested, please go to the website. And with that, I'm going to stop screen sharing, and we are going to take some questions because I know Leah has, we've been talking throughout this period of time about the implications for all of this, not just the stock market, not just the United States, but the bigger picture having to do with, could this be signaling the beginning of something very big in terms of a trigger of the world debt problem? And with that, I'm going to turn it back over to my partner.
Absolutely. Well, even though it's Friday, you have me, Tyler. So we can go with all the questions and talk all night. But to finish us off first, before we do just traditional markets, you want to give just a recap of what you're thinking with Bitcoin, because people are excited that it went over 4K, but I know you're a bit contrarian right now.
I will do that. And let's take a quick look at the Bitcoin chart. It was looking a lot better earlier. And I was hoping that Tone would be correct. His sequential and his candle analysis and his geometry in terms of the analysis of positions in price having to do with triangles and Fibonacci retracements and cup and handles is the best I have ever seen in my long career working with many, many technical analysts of the highest caliber. So I'm hoping that he is correct, that we can continue this move up on this weekly that has taken us all the way up into the fours, and we got up as high as 41.72. But we, unfortunately, towards the end of this week, have come down. I'm going to take a look at the 4-hour chart, and you can see how we've rolled over from that 4,100 area, the 39 to 4,000 area. The reason that's important to me, if we take a longer look, is because coming down, we were able to hold for a fairly significant time in these 4,000 ranges. When we broke below it, we came back up to it and then got as high as 4,300. And right now we haven't been able to get higher than that. And then we went to new lows, came all the way down to 31.22 before we started this last move up. I went on record saying I think it's going to be difficult for Bitcoin to get back above the 4,300 level. It's still too early to say if this activity is decisive. I don't believe it is yet, but we've still got a long 2 days ahead of us before the Sunday close, so we'll just have to see what happens. So let's go back to the weeklies and quickly go through my thinking of what's happening here. I believe 1,000 remains the target. I have no idea in terms of the time it's going to take to get there because of what I call the phase 7 of a hyperwave, which is what we are in. It will frustrate people to death in terms of throwing in these movements up and then go lower, then back up and lower and back up. We want it to get to wherever it's going as quickly as possible. And I'm going to talk about that once we get off this screen share. I'm going to quickly go through what I always do, starting with the stop and reverse points, which are accelerating down. And we've got to get all the way back up to 6,000 in order to turn that around. The length of time it takes us to get up to wherever we're going right now, the faster this is going to come down and meet it. At this angle, it will only take another 2 or 3 weeks before we're below 5,000. And then beyond that, we will get down to the 4,000 level fairly quickly. And that's going to put tremendous pressure on price, fully negative in terms of that particular indicator. The Bollinger Bands, we are attempting this week to get a full candle above the descending lower moving average. And we came close, but now we're giving up the gains that we had. We did start below that line, but this would be a good start to be able to make it back up to the middle line, which is declining. The speed with which we do that, if we do that, will determine exactly how far this can go. I doubt very much that any bounce is going to be able to get above this descending middle band. I am beginning to suspect we might not even make it above this lower target. That will be determined next week. For now, I would consider this neutral on the Bollinger Band. In terms of the Consensio moving averages, I will take off the price. And we are fully bearish. However, this week has caused the short-term moving average to stop going down because price is not going down anymore. That's why I use such a short-term Consensio moving average. I want the price to hug that short-term moving average. And when we put the price back on, you see that's precisely what's happening all the way through this movement. And that's why the short term in this case, just a 2 or a 3 is enough to do that. As price goes up, it's going to turn that short-term moving average up. But now we're going to start running into the midterm. It's fully bearish as we sit here. Take that off. Look at the RSI. Some people are saying this is bullish. I disagree. Because now, after being slightly oversold for a very short period of time, we're back above the 30 and we're all the way up to 38, which means in order to compensate for all of the oversold, the overbought that went on for such a long period of time, my reading of RSI, Wells Wilder's crowning achievement, in my opinion, is that we have to drop below 30 and stay there for a significant period of time. And I'm expecting to see 25 and even 20 before capitulation finally takes place. To me, this is fully bearish, even though we are popping slightly with this movement up. And finally, the MACDs getting a little bit closer on the 2 moving average, still fully bearish. And even though the prices are so much lower than they were throughout this whole period, you can see what the MACD does when you are in a full bear mode, which is where we are. So still to be determined if we've got enough strength to get back up to 42, 4,300. And then it's just a question of how far it can go before it turns down one more time and then seriously breaks below the $3,000 area. I think both Tone and others, as well as Leah and myself, have pointed out the reason 3,000 is such an important zone is because of all of this activity before the big move up. It lasted 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 weeks, 2.5 months. And that has provided enough support that we are bouncing off of it. But I would also notice by looking very closely that each one of these, starting here, got down into the lower 3,000s, 3,500. This one got all the way down to 3,210. This one got all the way down to 3,122. And even this weekly that turned out positive started out at 3181 on its lows. The reason that's important is I, as you know, love metaphors, and knowing that there's support down here from a long time ago. Each one of these are like termites eating through the floor. And as they do that, every one of these is breaking down that support. So any movement back down a second time is going to be met with less resistance than it had coming down this first time. And my reading of where we are is even a second time down testing the 2,800 to 3,200 level probably will not hold, which will take us very quickly down to 2,000, 1,750, 1,500, and Tone's 1,300 mark. And that could all happen within one candle. So I am not bullish, regardless of the fact, and even particularly because of the fact that all of the alts bounced so high, some of them 100% on this move in Bitcoin. They are now giving it back quickly. But as long as, and I completely agree with Tone on this, as long as the alts bounce with Bitcoin, that is not the end of the bear market. What we need is we need for them to stop bouncing, roll over, and go to zero as quickly as they can. And with that, I will leave screen share and go back to Leah.
Thanks, Di. All right, so I am going to start hitting you with some questions. I don't think you need the chart, but everybody is asking your thoughts on gold. You're welcome to bring up your chart or just have that.
I'm glad that you asked that because I've spent the week watching gold very, very quickly, which brings us into the bigger topic. There are 4 ways to solve the problem. And you all know what that problem is in my mind. And all of these markets, the stock markets, the crypto markets, the gold market, the dollar, currencies around the world, interest rates in particular, are all tied to one thing, which is global debt and the ability of the world to pay off the interest as well as the principal in some fashion. I believe mathematically it's impossible without one of four things happening: going back to a standard that will either bring gold up to $10,000 to $20,000 an ounce, Bitcoin up to a half a million or a million or 5 million, a default on that debt, or growing out of the problem. And what we have witnessed this week, this month, this past 2 months, is the possibility of growing out of the problem, diminishing to zero, or as close to zero as you can get when dealing with any kind of markets. And what I mean by that is, if we are indeed starting a bear market in the US, which I believe we are, that will have an effect on the US economy, even though it to date has not, other than with some anecdotes here and there. And that was the last vestige of hope, in my opinion, for the world to be able to grow out of this problem with some kind of synchronous growth spreading from the United States to other areas of the world. So it's not just that we are beginning a bear market, it's the implications of that for the US market and therefore the world growth in general. That leaves us with three alternatives: Bitcoin, a gold standard, or default on the debt. Now let's just think about default on the debt relative to what you've just seen about world markets and the US markets. Do you think debt is going to get better if we move into a recession? Of course not. It can't. It's going to get much, much worse. Now, you and I are not the only ones in the world that know that. Every central banker knows that. Every banker knows that. Every finance minister knows that. No one is in a position, nor could they be, to make those kind of determinations publicly. Why? Because it would trigger just what they're trying to avoid. You've got idiots like me that are coming out for a group of people that we are trying to help understand the situation, where I will not pull any punches. I will call it exactly the way I see it. And the way I see it is, what we are seeing in world markets is bringing the day of reckoning much closer, much faster. But clearly, I'm not the only one that sees that. So if put yourself in the position of a central banker, seeing what is going on. What is your plan? What are you going to do? Unless there's a fifth possible solution, and I'm still waiting for someone to send me that and say, have you considered this? I don't know what it could be. Therefore, I'm reduced to a gold standard, default, or Bitcoin. And if I'm a central banker, the last one I'm going to consider is Bitcoin. Just isn't in a position to do anything. Therefore, I'm thinking hard and fast about either default or a gold standard. The gold chart has been trying for the last 2 months to reestablish some sort of an uptrend. And you can all look at your own charts. I will pull one up very quickly because this is such an important topic, not because gold is going up or gold is going down, but its implication for the much bigger picture. So let's go back to this. And let's pull up precious metals. Here is gold versus the US dollar. We have broken for 3 weeks above the long-term moving average. We're at 1255 approximately, and the stop and reverse is moving up, and the short term is above the long term because the price is above the long term. Another reason why I use 3 on the short term as opposed to a longer period. I want to stick with that short term. It's a canary in the coal mine that maybe something is happening. The intermediate has broken above the long term, but the long term is a long way from turning up. We would need a number of weeks before that occurs, but we've got to start. And so I'm sitting up and I'm taking notice of this movement. We are above zero. The bottom occurred back in September on a weekly basis. So I'm going to switch quickly to the true range that you should look at when using Copic. And all of a sudden you go, well, that's not looking very good. Copic has been coming down and then put in a nice bottom that allowed us to think that gold prices were actually in a bull market. And I took it as that because Consensio said it was in a bull market here. For a short periods of time, then gave it up, then tried again, then gave it up. And now you see the long-term moving average on a monthly basis is not going up. It's flat to down. And the intermediate and the short term are below it. And price is still below it. And the stop and reverses are coming down. Now, that does not mean that price cannot break to the upside. And we're not that far away from the long term. And this is a monthly moving average. It just means that if central bankers are seriously considering a gold standard or some variant of it as a solution to the big problem, they've got to act very quickly because of what we've just looked at with the equity markets and what they mean for the economic growth picture. This chart does not tell me that anyone is taking this seriously. Now, we know for 7 years that China, Russia, and India are the biggest buyers of gold in the world. We also know that China believes that there is another solution to the macroeconomic problem, which is getting away from the US dollar and establishing some kind of a standard that is based on commodities, including gold. They haven't come out and said Bitcoin, but it's curious to me how much of what goes on in the crypto world comes out of China, not only in terms of mining, but the government taking over mining, and one wonders why. It would not surprise me that if a basket of commodities and a basket of currencies, including gold and possibly Bitcoin, doesn't show up in that basket at some point. Well, at this point, what we just looked at with Bitcoin says that no one has taken that seriously. I look at the gold chart and I say, I don't really see that with all the buying by the Russians, Chinese, and Indians, that it's really doing anything to turn around the bear market that we have been in since the peak at 1900. But I can see on this chart that it wouldn't take much in terms of movement up from here to tell me that something is going on where there is a shift in sentiment. And I'm not talking about retail investors, I'm talking about large institutions, large banks, and central banks, that maybe whoever is selling all of that gold to those countries doesn't begin to see that maybe they should stop selling it because something is going on here. So, as I have been saying, I believe the most probable outcome in terms of solving the debt problem is going back to a gold standard, unless we give Bitcoin the time and the running room to begin a move up again, that this is the thing that we're going to have to consider. Having said that, I am not long gold. And I am not long gold until we can get above that long-term moving average. And then I will begin considering going in, following Consensio, and getting back into the gold market. What I believe we're going to see soon, because of the way other commodities are acting, and we know how they're acting. This is natural gas. This is West Texas. This is energy in general, the XLEs.
Hey, Tyler,
Yes,
you want to see something pretty cool while you're on this?
sure.
Okay. You can, and then also people want to talk about silver, but maybe we play around a little bit today. Check this out. So when you're talking about China, obviously we know that that's also my favorite topic. So I pulled up the CSI 300.
Okay.
And look how insane this is. So, right, so the CSI 300, as you know, is the gauge of like the large caps in China. And even like the PBOC, I believe it was Wednesday, they announced their new monetary support measures and everything. But it's just, look at this.
That's amazing.
Talk about a bear
That's a
trend.
great chart.
Right. And then I linked up to compare it with obviously the won versus the dollar.
Right.
And it's just talk about not looking good like this.
Very interesting. Yeah. We haven't talked about China because no one really knows, except a very small number of people in the government, about what's really going on. There's all kinds of people that have opinions about it, but my reading is that if there's going to be a trigger point, it could come from China, not the US, where our economy is still a lot stronger. But that's a great chart. Yeah, thanks for bringing that up. Okay,
we're back on you.
Let's take a quick look at silver. And silver is not as strong as gold, technically, on all measures, as you can see. Whereas gold is playing up here, trying to come back up to its moving average. This is a monthly. Let's take a look at the weekly. That's not the way you do it. The way you do it is here. Still coming down very sharply. We are still under the stop and reverse, even though the last 2 weeks we've tried to get above it. We are moving up fairly nicely on the weekly SAR. I didn't catch the monthly, so let's go back to the monthly. I know what I should expect, and that's what it is. not showing any strength at all, down at -20. So this is a gold story right now. If gold does go up, silver will go up with it, in my opinion. A lot of people, Saifedean and Tone, don't agree with that. But I think that if we end up with $10,000 gold, we're going to end up with a very large number on silver also. And again, that is not showing up on the charts. So with that, I will go back and get out of that and go back to here.
All right. Dr. Hyperwave, you ready?
I am ready.
All right, let's do this. Let's see. Actually, we have really good questions.
What's that?
You go first.
No, go ahead.
Okay. It's just you have really good questions. I don't even know what to start with. Okay, some fun. Well, actually, I'll just make you laugh to start with. Live chat, thank you so much for this one. Someone said for the back is like waiting for Godot.
That's a great comment. Yeah. Yeah, no, that's like watching paint dry.
Exactly. All right.
Grass grow, and is not going to do anything to change any of the things we're talking about, in my opinion.
Absolutely. And as Tyler knows, my mom is a PhD in Shakespearean theater, so that one definitely rang true. Okay, let's do the ones that merge traditional markets and Bitcoin, and this will be fun. Why wouldn't stock market investors hedge small amounts into Bitcoin? We can even add to that because everybody's been talking about dollar cost averaging.
Right. Yeah. Two great points, and let's talk each one separately. I'll do the dollar cost average in second because it's very important. But in terms of there are very few people in stocks that are interested in Bitcoin. The people that are interested in Bitcoin are in Bitcoin or other cryptos. Yes, there are anecdotal differences to that. You can point to this person or that person, or maybe you as a listener. But the ecosystem around the cryptos sprang out of a group of people that attracted other people that were convinced that everything in the world is inferior to Bitcoin, so they were uninterested in it. They did not ride the 10-year bull market up in the stock market. And they were well rewarded for that because Bitcoin and the other cryptos did much better than the stock market until recently, 1 year ago. So the question is, who is going to panic out of their stocks and buy Bitcoin? Nobody that is not in the Bitcoin market to begin with. And guess what's happening in the Bitcoin crypto market? It is in a much worse bear market than any stock market in history. And now I agree that most, if not all, except a very, very few, know anything about why I believe we're going much, much lower on Bitcoin. So those people might put some more money into Bitcoin, but it's not because they're selling stocks or are worried about the world situation. If you're worried about the world situation and the debt, you, I believe, have to follow my analysis of the potential solutions to the problem. And Bitcoin is not one of them. From the world's point of view, not from you as someone that really believes in Bitcoin's point of view, but I hate to put this to you, but you're irrelevant relative to the size of the world problem having to do with debt and credit. Your solution that you're backing, hopefully someday, will provide us a vehicle by which we can not have to go through what we're about to go through. But because of all the things we've been talking about, that Bitcoin isn't in a position to do that because of all the cryptos, because of all the ICOs, because of all the altcoins, because of all the regulatory problems, because of all the technical problems within the space, being able to have confidence in the space that the vast, vast, vast majority of people with money in the world are uninterested in it. Now, for those of you that are interested in it, at what point does it make sense to begin dollar cost averaging? In my opinion, not until we're below $1,500. In other people's opinions, right now is a pretty good time because we've just dropped from 20,000 down to 4,000, which is a significant drop. And we've been down as low as 3,100. And now maybe a time to start putting a little bit of money to work. My point there is defining what a little bit of money is. If you're talking about X, which is different for every person, which is the amount of money that at some point they are willing to put into Bitcoin, then up at these levels, I wouldn't be putting more than 5 or 10% in. And then every $500 down from here, another 5 or 10%. So that by the time you got down to 2,000 or 1,500 or 1,300 or 1,000 or 800 or 600 or 400 or wherever this is going to end up, that your average cost is somewhere in the $1,000 level or maybe slightly higher. Now, why do I say that? It's because a drop from 4,000 down to 1,000 is still a tremendous drop on a percentage basis. And you don't start dollar cost averaging in a bear market at the beginning of a bear market. Well, is 4,000 down to 1,000 a significant bear market? Well, absolutely it is. That's a 75% drop. That's the beginning of a bear market. Just because we've already lost 80% doesn't mean that what might come is not just as big on a percentage basis. So dollar cost averaging is a wonderful tool for a 20-year time frame, which is made up of bull and bear markets. Because sometimes you're paying more and sometimes you're paying less, so that your average cost keeps dropping down during bear markets. That's what dollar cost averaging is all about. It's not trying to time one particular bear market to get in at a good price. The way you get into a bear market is after everybody has lost everything and capitulated. That's when you step in. Because now you've got twice as much money, 3 times as much money, 4 times as much money as you would have had if you tried to call the bottom, tried to catch the dropping knife. And you've already seen the capitulation and nobody wants to talk about it anymore. That's where you then switch to Consensio and let Consensio get you in a bit at a time until you're fully invested. So that's my answer to both of those sides of the question.
Thanks, Ty. All right, this is going to be a fun one that, well, I guess we could take a couple more, but we could play together if that's okay. So one person in the chat asked, well, specifically what they asked was, do you think that markets are manipulated? Now, we've said in the past, and we fully agree, and I've written about as well, is that there's no asset class in history that has not been manipulated. So I'm going to actually transform this into a 2-part question and add a little thought to myself. One is going to be, what do you think the most dangerous type of manipulation in markets are, given that if we both traditional and crypto, we talk about in crypto all the time, as we were this morning, right? They were talking about spoofing. Now a couple people are getting charged with fraud, etc. But if I could turn it back to fundamentals of Wall Street, I'll tie this up into a bow. But, you know, I personally see what we're looking at right now as well for what's happening in the S&P and what it is potentially S&P 500 is set for the worst year since the financial crisis right now. And Mattis, I'm sure, I don't know if people are following so much in DC. We've been talking about the Fed. We've been talking about, obviously the shutdown and all these different things. But Mattis was Trump announced that Mattis is retiring, which was quite a shocker last night at like 8 p.m. In February. So there's just a continuing, drama for pretty much the first time in history. You have the stock markets completely tied to news, which it wasn't that way before, at least not to this extreme, where when Trump says something, the markets react almost immediately. This spat with China is just prompting honestly, like global exits from stocks, right? Like rising interest rates. We've been talking about the Fed. Valuation at stocks are now just, at bananas levels. Like I think last time I was looking at it, it's an estimated like price to earnings ratio of like 14 times compared to 18 times at the start of the year. So it's just insane fundamentals that are also at play. So if we wrap this question up into a bow, yes, we've always said that every single asset class in history and all markets have been manipulated. What do you think are the most dangerous factors, manipulative factors we're seeing in traditional markets right now that are affecting and continuing and furthering this bear market? And what should we worry about, and are we seeing most in crypto? Are there similarities? That was a lot of word vomit.
No, but it's a very, very good question and point. And Tone and I disagree almost more than anything on all the subjects that we talk about. We agree on an awful lot. But my experience has been that all markets are constantly manipulated, and you have to be very careful in your definitions of manipulation. But let's just start with the biggest. In public, frequently now, never before, but frequently now, meaning over the last 10 years after the big downturn in 06, 07, 08, and 09, the Federal Reserve publicly says that we are supporting asset prices by keeping interest rates low, and that they are proud of the fact that they were able to pull us out of the last problem by giving us a 10-year bull market in stocks. That's manipulation, ladies and gentlemen, at the highest level. That is moving markets by using policy by powerful institutions. Now, those that don't recognize it and don't benefit from it by understanding how powerful that is just missed out on a 10-year bull market in stocks. If you name any commodity, any security, I will give you hundreds of examples of daily manipulation in all of those markets. What do you think the entire electronic trading is all about? It's about knowing information before other people can get it, even though it's milliseconds. It's enough for computers to be able to manipulate what should be a price discovery mechanism between people, not between algorithms. If you don't have those algorithms, you are being manipulated against. We know that people, individuals, can manipulate markets. Take a look at George Soros and the British pound. Take a look at the Hunt brothers and the price of silver. Then flip that over and take a look at what the Board of Governors did to the Hunt brothers by changing the rules of what could be bought and sold in the silver market, forcing the price down and destroying the Hunt brothers and their cartel that were trying to manipulate against them. They were manipulated against themselves. And on and on and on in the cotton market. in the cocoa market, in the sugar market, in the potatoes market. You name something, and I will tell you anecdotes and stories for the next 6 weeks about how they're all manipulated. The LIBOR, the short-term interest rate that everyone, including people in this country buying real estate through mortgages that had floating rates, relied on that rate. It was manipulated the entire time, and it's taken 15 years for finally to identify the people and the institutions that were doing it. Every market, constantly. So if you start taking that as a given, then you must use technical analysis to see what the prices are actually doing, because all manipulation, either institutionally or individually, shows up in price and can never be discovered through fundamentals. Fundamentals tell you that it's supply and demand going back and forth, but it doesn't tell you who's pulling the strings, and technical analysis doesn't either. But technical analysis knows when the price is starting to move in one direction or the other, regardless of if there's manipulation or not. So that's a great way to pull it all together.
Well, I'm just going to play with that with you a little bit more, if we
Great.
can have a little fun. So as you very well know, I mean, so I did a little bit of work, which is why I've been, having too much fun with you and Tone about WTI and some trades that I want to put in for crude, but in oil and gas. And I was learning especially about futures markets, and then also about information gathered on international markets. And there's just such a gray line when it comes to the futures markets, naturally, on what is seems to be insider information, but is not. Because again, it's future. So when you talk about manipulation, and yeah, we're talking about the Hunt brothers and all these fun ones, it gets, I think, even more interesting, especially with private equity plays or leveraged buyouts in, let's say, oil and gas, which is a really good example, when especially you have so many different fundamental factors at play. I think that it can be personally a bit more difficult to understand and not screw up your plays, even when you're using TA, when you are using TA to finally put in your trades, given on something that is just so easily manipulated when it's legal to do such a manipulation, even more than, we've talked about before HFTs, high frequency trading bots. We've talked about, Lewis and his books, everything. But personally, this is my own just personal assumption, is that looking at the futures markets, and again, ONG specifically, is when you're running into manipulation that you just can get so absolutely wrecked, even following all the rules of TA and taking the fact that TA does incorporate all FA in it as well. Am I out of my mind?
No, not at all, because the distinction is a market, a stock, a security, a commodity that is illiquid relative to other things is much more easily manipulated. And Tone and others believe, I do not, that if somebody with more money can move a price in an illiquid market, that's not manipulation. To me, that's too fine of a point. I would define that absolutely as manipulation, but it needed to be recognized by those that don't have as much money in a market. And the best example of that is crypto and Bitcoin. Folks, what do you think pump and dump means? That is the definition of manipulation. But it occurs not because somebody's got more money than somebody else. It occurs because of an illiquidity in a market, which allows anyone that has more money than someone else to punish that someone else, because they know beforehand that by putting in 10x instead of the x on the side of supply, they put in 10x on the side of demand, that they're going to blow through that weaker hands. That is preconceived manipulation of price. And shame on you for being involved in that market, knowing that fact, knowing that at any time someone with more money can destroy you. You are allowing yourself to be manipulated, but that to me does not mean that it is not a manipulated market. I'm not saying it's an illegal market. I'm saying it's manipulated. And if you want to be manipulated, play in those markets. Good luck.
Definitely true. I think to your point, yeah, Tyler and I have always said that it's very important to understand the definitions. I think I speak too quickly and mix up my words and wish that I had slowed it down. But yeah, right. I think pretty simply, manipulation, at least in my eyes, if I were to define it, is, artificially inflating or deflating the price, and therefore influencing the behavior of the markets for your own personal gain. And I think that's also why we discuss scams so much in the crypto space. But manipulation is not always illegal. Is it unethical?
Exactly.
Yeah.
That's exactly the point. And we talk, Lee and I talk a lot on our vlogs and other places about what's called painting the tape or talking your own book. Folks, painting the tape and talking your own book is manipulation. When someone goes on CNBC and they start talking up a position that they're in and giving you all one side of the story, it is to move the market in their favor. How do you define that? I define that as pure outright manipulation. And yes, if regulators define or look carefully at the wording of their own regulations and laws, they could go after all of those people. They could shut down CNBC for allowing that sort of thing to go on, but they don't, because it's widespread. But you must know that. You must understand that these people are talking their own book. We, Lee and I, get accused by trolls constantly that we must be manipulating people about our price targets on Bitcoin and other things because we are shorting it and we're doing all this kind of stuff. Well, that comes from a knowledge of what really occurs in the real world. I hope I never am guilty of that. I don't believe that I am, but that's what my point is, how easy it is to do that when you begin listening to people and you don't really know what's behind why they're saying what they're saying. So you and I, Leah, are on the same page.
Yeah, and I mean specifically, yes, shiny forehead, do you guys, whatever. It's the intentional conduct to deceive. Yeah, is manipulation in my eyes, the intentional conduct to deceive. So just as a very quick example for everybody who's asking about manipulation, yeah, and you can compare this directly to the crypto markets as an example for strong activist investing hedge funds. This is something that is absolutely not illegal and is always done. And if you guys watch Billions, one very funny, that's Cohen. That's Stevie Cohen, right? So SAC originally. But if a very large activist investing hedge fund gets the majority share of a company, let's say it's international, let's say they buy Sony, let's say they buy Sotheby's or whatever they may buy with the majority of the float, they're allowed to shake up the companies. But even by the fact that they decide to take the majority sharehold of that company, then the markets are still going to believe that they have found something that is totally undervalued, that everybody else has missed it, and they're gonna, with FOMO, jump right in. Is there a direct correlation here to the crypto markets? Absolutely. Now, can we take it further and actually say that it's, illegal manipulation in a lot of other ways and almost on every single other exchange in the crypto space? Absolutely. And yes, I'm just going to say it right now. That is why I hope all the rest of the alts go to zero as soon as possible and Bitcoin remains as king, because then little by little we can clean up the space and the illegal manipulation. Now, at the same time, everybody does need to keep their head on straight, or follow Tone, Tyler, Nick, and all the other maestros regarding TA to know exactly when to trade it. When, let's say, a Stevie Cohen or a Dan Loeb or these other smart individuals come in with some big heavy trades, and you're able to follow it. But I'll stop my tirade there.
Terrific. That's great. Well, thank you. Thanks, Leah. One more quick reminder. Um, don't let any seat go unfilled at Unconfiscatable. It's going to be so much fun. So many clients are coming, and not to do anything other than meet Leah and myself, but then attend Tone's workshop, um, Jimmy's development workshop, our hyperwave workshop, but just to be able for all of us to sit around for 4 days, have a great time, learn a lot. It's going to be terrific. And I just know it's going to grow year after year. It's going to be a big event. And remember, those of you that are Bitcoiners and not simply crypto people, this is where it's at, because everything you're going to hear is going to be Bitcoin, Bitcoin, Bitcoin.
Tyler, last thing, putting you on the spot.
Yeah.
Everybody, Tyler's actually a super poker shark, and you were trained by the best, were you not?
I've got a little experience, but we'll see what happens.
Underselling, he's gonna slay. Okay, everybody, thank you so much for watching. Yes, absolutely. Tone was so generous. We actually get 50 seats, and in about 2 weeks, we sold out. What are we at? Almost 40. So I would pick those up very quickly. You can get on the website, as well as all the rest of our former webinars. And everybody have a great Friday. Happy holidays.
Happy
Upcoming
holidays,
New Year's.
everybody. Try to put all of this stuff behind you for the next week or so, if it's at all possible. Enjoy your families. Enjoy the holidays. Great talking with everybody. Bye-bye.
Bye, everybody.